Hello everyone. This video is going to be very interesting because I've got something really important to talk to you about. It's and again it's titled Why I Send False Trade Signals. So not every free trade signal I send you is actually valid. Every once in a while I'm going to throw in a curve ball, and I want to make sure that you're paying attention to what I'm doing, and I'm going to explain in this video why I do this. Okay, so the signal in question, this happened last Monday, and this was the most recent signal. Here it is. I sent this out to all my subscribers and to everyone who is getting the free signals from me. It states that you should buy the Euro Japanese yen. That was my trade signal. I did give the entry, the stop loss first, and second, take profit targets, and some instructions on entering the trade. It was a buy trade. So again, buy Euro Japanese yen, and it was issued to all of you on November the 10th. Okay. Now, obviously the trade did not work out. It hasn't really lost yet because in my follow-up instructions, and I do this for every trade signal I do send out, there's always a follow-up the next day. And remember, we are trading on the daily time frame. So we only have to look at our computers once a day since we're looking at the daily charts. And generally, we want to look at the computer after 5 p.m. Eastern Standard Time. That's the the New York time zone. Okay, Eastern Standard Time. After 5 p.m., that's when we want to open up our charts and take a look, see what happened to our trade. Now, this is me right over here. My name is Martin. I'm a proud Canadian trader, guys, and I want to give everyone these free Forex signals. You're going to learn quite a bit, and as you subscribe to my program, and getting these signals, you're going to learn quite a bit, guys. So it's especially important for all the traders who spent years trying to become successful and are just failing and losing their money, and they just want to get back on the right track. Okay, welcome everyone to my free Forex signals, which are part of my new training program to make ABC Forex even simpler. Did I mention there's no obligation and nothing to buy? My intentions are for you to keep learning and earning in the simplest, easiest way I can think of. I just want you to follow and copy my instructions and my trade signals. That's all you have to do. I've been teaching students for many years, and I'm still amazed at how many of you are blowing your real money account. So I need you to stop that. I need you to stop making crazy, silly mistakes. And I need you to stop, more importantly, reinventing your own rules and strategies, especially if they're not working out and you're just not having any success. So I just need you to follow what I'm doing with this program called Free Forex Signals. Now, don't blame me, okay, because I've got my humble disclaimer right here for you. I need you to read it. Don't blame me if you lose all your money. You probably weren't paying attention to what I'm teaching you, and you're not following my instructions. Remember, we're trading on a demo account only. Okay, so we're going to look at the chart in a minute for the trade signal I did issue. And here it is again right here. This is the original trade signal that was emailed to all of you and all my subscribers. And here's the actual chart. I've got the entry in blue, the take profit over here. There is a second take profit. We'll look at that on the chart and on the real chart in just a moment. And here's the stop loss right over here. Okay, guys, here is the chart. You can see that right over here, and right over here, it was after this huge candle right here. After this huge candle, I gave you the signal to take a buy trade. Again, this is a chart for the Euro Japanese yen. It's a daily chart, which means each candle is a daily price movement. Okay, and so after this candle closed right here, the signal was issued right here. You can see at 124.34. That was the entry. I did give you the stop loss. Okay, so you put that on your trade. That was at 123.14. I gave you the first profit target here, one at 125.20, and then the second profit target if price goes up higher, okay, all the way up to here at 126.08. So these were the two take profit target levels. Okay, let me just take that off for a second. And what happened after I issued the free trade signal, you can see the next day was a doji, very little movement, almost nothing happened at the close of this candle. Close of this candle, price went down just a wee bit right to there. That's where price closed. Next day, another doji. That was the Thursday. Friday, it went down a little bit more. But what's interesting, price didn't really roll over down really quickly. We had huge volatility going up, but the next subsequent 1, 2, 3, 4 candles really made little movement on the downside. So every day I issued an update and I said, just hold on to the trade. Don't close it yet. And this is where I'm trying to teach you patience, guys, because if you want to be successful in Forex, you've got to learn how to have patience. So because price didn't move down that much, it's nowhere near our stop loss right here. You can see I'm still waiting for price to kind of go higher, but it was a false signal. And this is the actual chart I'm using for my signals, guys. You can see there was a signal right here on the previous large candle. Getting in here would have made a monster move, okay, right? But I issued the signal after this here, and I did it on purpose because there's something wrong with this candle. Something wrong. Now, some of you may guess what it is. Some of you who have taken a previous course of mine may, and I stressed this in the previous course, which was about a year and a half ago. I mentioned something about the price movement of candles. And so this is really important, guys. This is the big clue right here. And I would not have taken a trade, even though I issued the free trade signal falsely. So I did this on purpose, guys, because I want to teach you some important lessons as we're going along. Okay, now let me just take that off. Now, there are several reasons why I did give you this false trade signal, okay? And one of them is the first thing I need to do is to know that you're paying attention to all of my instructions. How many times did I say that I want you to only trade on a demo account just for now, right? Once we get comfortable, once you understand what's going on here in the Forex markets and what I'm doing and how I'm teaching you, then you can open up a live account and not before that. So I did say many, many times, only trade on demo account for now, okay? I'm not only, and the reason is really, I'm not only giving you just trade signals, I also want to be teaching you how to trade with very important lesson and tips, okay? And so it's not just giving you the signals. I mean, giving you the signals, you're not going to learn anything. You're just going to learn to take the signals, but you really won't understand what's behind the signal and why it is a trade signal. All along, it's going to take a little while, guys, so I need you to have some patience, but we're going to be teaching you important aspects of trading that as a trader, if you want to be successful, you will absolutely have to follow, okay? Now, the other thing is my algorithm shows entries with visible signals, okay? Visible means that there are arrows that show you when there's a possible entry, and there was not an arrow after that very large candle. I will go back. Okay, you can see after this large candle, this large move up, there was no arrow. There's no arrow on this candle, okay? Here is the arrow. The actual free trade signal I could have issued to you was right here, but this happened on the Friday, and normally I don't issue signals on Friday. So this was on the Friday. This big huge move is the result of the Sunday and Monday move. So this candle closed at the end of Monday's New York trading session at 5 p.m. Okay, and that's where I said I saw the signal. So the signal is actually on the previous candle right here. But here is the main rule why the signal was false. Okay, and I want you to look at this, and you may want to write this down. I personally never take an entry unless I follow the ATR rule. Now you may ask, what the heck's the ATR rule? Okay, well, we'll get into that. After I get a potential trade signal, I check to see how far the signal candle has moved and qualify that this signal candle falls within my normal volatility range. Okay, now that's a mouthful. For a lot of you, you may be lost, and I'm going to show you how easy it is to understand that, because we're going to go right back to the charts in just a second. Okay, so it is super important to understand that whenever you're considering taking a trade, you always follow you always look to see how far the candle has moved, because I mean, for you to be able to enter, right, there has to be a clue as to when you enter a new trade. So in my case, when I gave you the free signal, which is false, there was a large movement up higher, and that was a very volatile candle, bullish candle, and it did not qualify within my normal volatility range. We'll get to that in just a second. Okay, I promise you I'm going to make it very easy for you to understand. I just want to go over one more thing, and we're going to define what my normal volatility range is before we go back to the charts. Okay, so I use the ATR indicator that's already on your charts. The signal candle, the one that provides the signal for me whether I'm going to get in or not, the signal candle cannot have moved more than 1.2 times or 120% of the daily ATR. And what you do is you measure the signal candle ATR. We're going to do that right now. We're going to go back to my false trade signal. We're going to look at that huge candle, and we're going to measure the ATR. Guys, this is really, really simple to do, and it's going to change the way you trade. Okay, this is the candle in question. This was my signal candle falsely given to you, okay? And I based the free trade signal on this candle. So the first thing is, guys, you have to measure the ATR, the average true range. What that means is the ATR measures the volatility over the past or previous 14 candles, okay, and gives you a number. And I'm going to show you how to get that number, how to read the number in just a second. So the first thing we want to do is find out what the ATR is, okay? And when an average true range means from the low to the high of the candle, okay? But we use the ATR in a slightly different way, but that's what it really means, from the low. So the candle right here, it was the low to the high up here, and that entire range is called the daily ATR, average true range, okay, over the last 14 days. Let's take a look, guys. I'm going to lift something up for you. You see this blue line right here, okay? And I'm going to put my mouse right on there. You can see the ATR 14 over the last 14 days. It says 94 pips, okay? So when we go back over the last 14 candles, the average true range of these candles is 94 pips. Now, let's measure from the low of this candle on a bullish candle, from the low to the close, okay, that is 179. Can you read that, guys? Okay, I used my crosshair tool. Let's do it again. From the low to the close of the candle, okay, is 179 pips. And you can see 179 pips is quite a huge movement. It's quite a volatile movement. However, over the past 14 days, the average true range, guys, okay, was only, again, take a look, ATR 14. It's the last line here below, okay, below my arrow. It's There it is. It's 94. You see 0.940. That's 94 pips for here. Okay. Now you can also take a look at this, the average true range, by bringing up the data window on the left side. See if I can do it. Just a second. Okay, guys, take a look. This is a data window. I brought it over from the left side of my chart right onto the chart because all of these windows here on the MT4 platform can be moved around. You can see you can actually move it, okay? But let's take a look here. I'm going to put my arrow or my mouse cursor right on this candle right here. You see this one with the blue arrow, okay? So take a look right here at the ATR on the left here, ATR 14, and read this number. Okay, so right here it shows 83, and after this big move candle, take a look at the ATR on my data window on the left over here. Okay, right there. Okay, take a look, and it shows 0.94. So the volatility was increasing. Again, go back to the next candle. You can see the ATR is 91. The next one is 94. The next one 94. Next one 95. So basically, over the last 14 days, volatility is holding steady at around 94 pips, and that's really important as well, as I will explain momentarily. But the main thing that you understand is the ATR on this normally should be 94 pips. It moved instead, and I'm going to move this out of the way now. Okay. Instead, it moved from the low to the close, 179. Okay. And, but that's not the true average range. The true average is actually from the bottom to the top here, which was about 245 pips, guys. The reason I said from the low to the close is this is something that you can do and understand, but it's way outside the normal. What was the normal? Okay, I said 1.2 or 120% of the average ATR. Okay, so this candle for us to take a trade cannot be more than 1.2 or 120% of the ATR, right? The ATR right here. So it was again 94. And again, if you're looking at what 1.2 is, okay, for this candle, the 1.2 or 120% of the average true range would have been 112 pips, and that's all it is, 112. But when you measure from here to here, it is actually a lot more, right? It is much more than 112 pips. In fact, again, let's do this once more. Using my crosshair tool, it's 178 approximately, right? And even more if you do the actual ATR. But this is something that you can do for a bullish candle, and you can see it's way beyond the 1.2 or 120%. Therefore, if there's a signal that was given after a large move, don't take it. It's false. And you can see what happened. Price just died down. In fact, on many of the currency pairs, there was a huge up move on that Monday, on this particular day. And in most cases, price did reverse down to come down a little bit lower. So that is the reason. And this is what we're talking about, the average true range. Again, this is really important, guys. I use the ATR indicator that's already on your charts. The signal candle cannot have moved more than 1.2 times or 120% of the daily ATR. And then you measure the signal candle using the ATR indicator that's on your charts. Okay, everyone's got the ATR indicator. You'll find it on the left side of your chart under the navigator window. Again, I've just brought the navigator over from the left of my charts, which is outside the screen here, and brought it over so you can see it. And right here, ATR, guys, that's the ATR. What all you do, if you don't have this on your charts, because you need to place this and see the blue line beneath your chart there, you need to have this because it's absolutely important and critical. The ATR actually is one of the most important indicators that you can use to measure volatility in the market and whether you should get in a trade or not. But again, you would just drag this over, okay? So you would just take this, drag the ATR over like that. Okay, it's you can set this at 14 if it's not default already. Okay, the color I just have it a blue color. It's very simple, and then you just click on OK, and you're going to have that below your chart, right? Or you can, let me just move that out of the way on the left, or you can also view the information of the ATR on your data window. Again, I'm going to bring that over again. See, here's the ATR. This is the data window, and you also find this on the left side of your charts. Okay, you can leave everything on the left side. You don't have to bring it over like I'm doing right now. Okay, so that is the important tip and lesson for today, and this is why when I let me get my drawing tool. Um, I gave you this after this big candle. I gave you the signal right here, guys. That's false, completely false, bogus. Another word for false is untrue. Okay, I shouldn't have given it to you, but there was a good reason, because as a teacher, guys, I need you to follow what I'm talking about, and I need you to follow my instructions. And the first instruction and the most is only trade on your demo account, not on a real live account. Okay, that is super important, because there's going to be lessons and tips along the way. With my free trade signals. Okay, later on, guys, you will get more information on these indicators, and I'm going to give this to you. We're going to do this for a while. I need you guys to pay attention. Okay, let me just take that off for a second. Now, where is price going? Some of you have asked. Okay, well, let's take a look. Does anyone recognize this pattern? Here we have a price has gone up from a low right here, and price is going down, but just gradually, not a lot. Does anyone recognize this? It's a pattern in Forex trading called the flag. It's a bullish flag, and generally after a while, a price comes down to maybe to exhaust itself, and from here, this level goes right back up. Okay, so that's a possible scenario. It's called the bull flag pattern in Forex trading. Guys, you don't have to know this. I'm just showing you that it doesn't hurt to learn anymore. But right for now, I just need you to follow my simple Forex trade signals. Okay, so that's really about it. I just want to continue with a couple of other things. Just a second. Okay, continuing with your education, guys, this is really important. To become successful, you need to first learn how to protect your money. That is the most important thing that you have to learn. It's more important to learn how to protect your money and how to protect your money from or your capital from losing, especially when it comes to losing trades or taking bad trades. A good algorithm tells you when not to trade, and guys, that's one of the important rules of my algorithmic trading and the free signals. Okay, so pay attention to a candle. If it moves too much, most likely it's going to reverse back. It's going to take a rest. Okay, always check the volatility prior to getting into a new trade. Too much volatility could mean that price will slow down or pull back first before potentially resuming in its direction. Okay, so right now, I need you to do this, guys. Everybody, if you haven't done this already or you don't have this on your charts, put the ATR indicator on your charts. Okay, you'll find it on the left side in the navigator. You just drag it over and release it, and you'll have the ATR. Okay, so learn the process, guys. Best wishes to your success. Learn the process. I'll be talking about this a lot, and today is just one of the most important rules. As we go on, there'll be a lot more important rules I'll be adding to our training program. Okay, so that's what this video is all about, guys. Again, thank you very much for watching. Don't forget to subscribe. Hit the like and comment button if you want to send me any comments. When you hit the subscribe, you got to make sure you hit the bell, the icon here that's below this video on YouTube. Okay, you'll find this, and that makes sure that you get all my future videos in your inbox. And again, if you want free trade signals, guys, if you want the free trade signals, you have to subscribe to my channel, and you have to, secondly, you have to actually get the signals in your inbox, you need to email me with your current email address. Okay, it's important to email me. Don't worry, I'm not going to sell your email. I'm not going to send you junk or anything like that. So make sure you do that. Okay, again, my email is below the video in the description, and you have to send me your email to get the free trading signals. Take care. Cheers from Canada, guys. Stay safe, and we'll talk to you next time. Bye.